CNBC TV 18, celebrating 15 years of leadership.
Our top story tonight, a day before the coal auction begins, relief for Sesa Sterlite, Sarda Energy and Usha Martin. The Delhi High Court orders the government to reconsider their bids, which were rejected earlier.
A fantastic Friday to cap a fabulous week on Dalal Street. The Sensex zooms nearly 300 points to race past the 29,000 mark. The Nifty reclaims 8,800.
Crude oil prices continue to climb. For the first time this year, Brent is back above the $60 mark per barrel. European markets surge after better than expected GDP numbers.
A pleasant surprise from SBI in the third quarter. India's largest bank sees profits rise by 30% thanks to strong growth in corporate loans. Stock surges as asset quality stabilises.
The government and the telecom regulator are at it once again. The telecom department asked the TRAI to review its recommendations on spectrum sharing and trading. Government sources say the regulator's view does not factor in the centre's interests.
Cognizant point of view, we have guided to 19% growth for our financial year.
IT major Cognizant is confident of clocking 19% growth this year, even as the industry body NASSCOM pegs its forecast between 12 to 14%. Cognizant is also on the prowl for acquisitions and will not shy away from big deals.
Trade deficit in January shrinks to its lowest level in 11 months thanks to falling oil prices, but exports slump for the second straight month as global demand remains tepid.
Magnificent strike into the crowd. India lift the World Cup.
Well, the World Cup is upon us once again. Just a few hours to go before the first ball is bowled and New Zealand take on Sri Lanka. Good evening. Thanks very much for joining us on India Business Hour. Surbi, India beating Pakistan, right?
We're just going to hope that lucky streak continues to read, beating Pakistan for 5 times in a row, not losing out. Let's just hope that, luck continues to be on the side of the men in blue.
Well, that is right. Let's hope luck continues on the cricket pitch, and luck certainly continued to play out on Dalal Street as well, where the markets have had a fabulous Friday and a fabulous week as well. A 300-point rally on the Sensex today, a 100-point rally on the Nifty, and even the mid-caps continue to hold strong. The mid-caps rallying about 100 points. The mid-cap index once again outperforming quite substantially. And of course, it's been a fabulous week, as I pointed out, for our markets, and it's very, very clear that the bulls are firmly in control. We'll get you more details on the market action in just a bit, but let's go straight to our top story, and this one comes into us from the Delhi High Court, where there has been a dramatic twist, or actually many dramatic twists and turns to the coal block auction. Ashwit Kumar is standing by along with our colleague Anshu Sharma. They've been tracking all the details. Remember, the Delhi High Court called almost an emergency hearing, a late night hearing today. That hearing has just gotten over, and Anshu is going to take us through the details. Anshu, a late evening hearing of the Delhi High Court which is just concluded. Run us through the details of what the court has said, who has been granted relief, and what does this now mean as far as the coal auction is concerned?
there were at least 4 to 5 cases in the High Court today, and it pertains to technical qualifications. Sesa Sterlite had a technical glitch in submitting its document, and the High Court has allowed it to participate in the technical bid, which has already been given out by the Coal Ministry, the qualified bidders for the technical round. The other case pertains to Usha Martin as well as Sarda Energy, where they had shown their subsidiaries requirements for their end-use plants. The High Court has also allowed them to participate in the technical bids. The other two matters were for Monet Ispat and Jaiswal Nico, which said that multiple bids were allowed for single coal blocks by the companies, and it gave them edge over the ones which did not bid for multiple times for single coal blocks. That matter will be heard again on the 18th of February. But coming to the financial bid part, which starts from tomorrow, which is 14th of February, the government will start opening the financial bids made for these coal blocks which are put up for auction. These are 20 in number. That will go on as scheduled, because the 2 coal blocks for which financial bids will be opened are not part of these court matters which were heard today in the High Court at Delhi. So the government has said that the government will abide by the High Court orders, and the schedule for coal auction will remain as same. Back to you.
Okay, Anshu, hang in there, because we've got the Coal Secretary Anil Swarup joining us, and chip in with your questions as well, Anshu. Mr. Swarup, thanks very much for joining us on India Business Hour. What happens now, sir, because the challenge mounted by several companies, and in fact more companies now getting relief from the Delhi High Court in this late hearing that has just in fact concluded. What does this now mean as far as the government's plans for the coal auction process are concerned, sir?
The coal auctions will go on as scheduled because what the court has done is to allow a few more companies to participate in the auction, and that's about all. It does not impact the auction process at all.
So our understanding is that the court has basically said that the technical committee must now evaluate these particular bidders as well. When can we expect a conclusive recommendation now from the technical committee? When you spoke with us last night, which was a different story because then it was only JSPL and BLA Energy, but now there are more companies that have been added on. When will the technical committee give its recommendations as far as these bidders are concerned, or potential bidders are concerned?
No, you must understand the difference between these two sets of cases. Jindal case was totally different, where in terms of the end use had to be determined of a particular plant. That's a different issue altogether. What the High Court has done today is to allow these companies to participate in the auction. There will be no further technical examination in it. We'll go by the orders of the High Court and allow them to participate in the auction tomorrow itself. So there's no further examination required. And the auctions as scheduled for tomorrow, 11 o'clock, will go as per the schedule.
It will go as per the schedule, because there was some confusion on the Government Council having stated that it will now be pushed to the 15th. You're saying that there is no plan to reschedule the auction. It stands for the 14th of February.
No, I'd like to clarify once again. You must understand the difference between two sets of cases. Whereas in the Jindal's case, they were contesting the end-use part. For that, the matter has to be referred to a technical committee. They will come to a conclusion whether that end-use should be X or Y, whatever they conclude. And in any case, those cases or those blocks did not belong to Schedule 2. What was being discussed today by the High Court was Schedule 2 blocks, where auction commences tomorrow morning. And the decision of the High Court in no way impacts the auction process, because these companies, as you're showing on your screen, all these companies will now be able to participate in the auction. So auction carries on as per schedule.
So how many, sir, after what has been ordered by the Delhi High Court, how many qualified bidders now will be part of the auction tomorrow?
No, each block has a set of bidders, and these bids will be opened tomorrow. The initial initial price offer will be opened, and through a particular mechanism we'll determine ultimately how many of them will participate. But they have been allowed to participate in the bidding process which means that their initial price offer will also be opened. And if they qualify among the top 50%, they will be allowed to bid in the auction process. That is how it will be. The exact number will be determined tomorrow morning when the IPOs are opened.
Okay, Mr. Swaroop, before I hand it over to my colleague Ashmit, who's been tracking all the action in court, yesterday when we spoke with you, you said you were not sure whether you will in fact move the Supreme Court to challenge the decision. Has a decision now been taken by the government in light of the many additional sort of claimants for the auction process? Are you now likely to move the Supreme Court, sir? Has a decision been taken?
So I'm sorry to say, I've been trying to convey to you the difference between two sets of cases. What the case yesterday was with regard to the end use of a plant.
No, I get that, sir. I get the end use. I get the end use. I get that, sir.
It has nothing to do with the auction. It has nothing to do with the auction tomorrow. That relates to Schedule 3 auction. We still have a lot of time.
Tomorrow.
We're still discussing it. Maybe on Monday or Tuesday. Monday or Tuesday, we will, if required, we'll go to file an SLP.
Okay, so you're saying you haven't decided yet, and I get the fact that the end-use decision is a different decision, and what was discussed today is a separate matter. But what is going to be the government strategy now? Because there will perhaps be more companies that may now like to look at other ways of challenging the government. For instance, this morning, the compensation issue was also held up for legal scrutiny.
See, it is the right of the companies to challenge the decisions of the government in the courts of law. No one can stop them. No one should stop them. We will contest these cases in the courts of law, and we will abide by the decisions of the court. The key is that in none of the decisions so far, or in none of the challenges, has the ordinance being challenged. What is being challenged is the particular process. And if a particular directive comes from the court to change the process or do it in a particular manner, we will do that.
All right, Mr. Swaroop, we wish you the very best of luck with the auction tomorrow, and thank you very much for joining us and giving us the government's clarification on what has been a late hearing in the Delhi High Court, taking up the matter related to the coal auctions this evening. Thanks very much, sir. Appreciate your time. Surbi.
Right, Shireen. So it's quite clear, different sets of cases, as Mr. Swaroop is also saying, different, ways of challenging the government on different counts. Before we throw this open to some of the companies that have been going to the court against the government, and of course some legal perspective as well, let's quickly bring in Ashmit once again to understand the legalities of this auction. Ashmit, as Mr. Swaroop was also pointing out, as I see it, there are three different issues. One is, of course, end use. That's a different matter for Schedule 3 blocks. That was the earlier JSPL case. But again, JSPL this morning went in and was fighting for compensation as well, alleging that the compensation which the government is giving back on infrastructure, mining infrastructure, is not adequate. So there's compensation, which is a problem. There is end use, which is a problem. And as some of the companies later in the evening have come out and said their bids getting rejected, that itself was being challenged, and of course they've won relief. So just run us through where we stand with respect to the auctions that actually start tomorrow, the Schedule 2 auctions.
Well, we have a mountain of legal worries as far as the government's auctions are concerned, which only appears to be rising as of now. As you correctly pointed out, JSPL, in fact, after tasting some success with its earlier plea on end use, has now filed a fresh application on the compensation issue. And mind you, this petition of JSPL is along the similar lines as another petition that is already pending before the Delhi High Court. That's by GVK Power. The question being raised is on the quantum of compensation that is being awarded to prior allottees in case of with respect to mining infrastructure. That is a subject matter of greater debate. We understand that the court has subjected this case has subjected this matter of compensation to further orders by the court, and we'll see further hearing in this matter. But clearly, after seeing blocks being withdrawn from the coal auctions, after having cases such as the one in case of JSPL and GVK, where the auction proceedings to a certain extent are being subject to further court orders, now we also have cases of disqualified parties now appealing before the Delhi High Court, and we understand that a fair amount of relief has come towards Sesa as well as Usha Martin as well as Sarda. With respect to Sesa Sterlite, there was some confusion with respect to the documents they had submitted. They had submitted documents for a captive power plant. The government was considering them with respect to an independent power plant. Towards that extent, the Delhi High Court has held that the technical committee will review and will judge upon whether or not Sesa Sterlite has qualified. On the question of Usha Martin as well as Sarda, the question they had raised is that while making the bids, they are required to cite the requirements, total coal requirements. They had also included the coal requirements of their subsidiaries. Now, the important clarification that the Delhi High Court has given is that bidders cannot include the requirements of their subsidiaries and that only the parent bidder will be considered. And towards that end, these parties have also been sent back to the technical committee. So saving face as far as these three parties are concerned. Several questions being also raised by Monitor Spot on the extent of bids that is allowed per bidder. They've cited names of certain companies that are allowed multiple bids. Towards that extent, of course, we had another order by the Delhi High Court subjecting even these proceedings to further High Court orders. So clearly a mountain of legal troubles which, of course, the Coal Ministry will have to face. But for now, it's also important to point out that the auctions do appear on course. 11 a.m. is when we can expect the e-auctions to begin. Back to you.
All right, Ashmit, yes, that is what the Coal Secretary has confirmed, that the auction process will continue as per schedule starting tomorrow. But joining us now is Mr. Mundra, of course, from Sarda Energy. Mr. Mundra, appreciate you joining us. Well, you have got some interim relief from the Delhi High Court because the Delhi High Court has ruled that your bid should also be taken up by the technical committee. But it's also very categorically stated that subsidiaries of actual bidders cannot be cited in the bid. So partial relief in that sense for you and interim relief. Your first comments, sir.
Yeah, it is a great relief to us, though it is a partial relief, but our bid will be allowed and only our requirement will be considered excluding our subsidiary requirement. So whatever requirement is of our parent company, that will be figured out and based on those will be made qualified for the respective mines. So it's a great relief to us.
Mr. Mundra, could you just clarify to us what are the mines that you are bidding for? Will you be participating in the auctions now tomorrow? Do you have complete clarity from this court order, that you can participate in the auctions tomorrow?
Yeah. Based on our requirement, excluding the requirement of our subsidiary. So whatever mines, because we have applied for 6 mines, that is Gare Palma, 4x1, 4x4, 4x7, Bicharpur and Chotia. So wherever we are qualifying based on our requirement, excluding our subsidiary requirement, will be eligible to bid for that.
Okay, let's bring in Amit Kapoor of J. Sagar Associates into this conversation as well. Of course, he's been, we'll try and touch base with him in a bit. But Mr. Mundra, just to understand this further, how many bids had you submitted? Out of the rejected bids, have all of those rejections been overturned by the court order today?
Yeah. All the rejected bids have been overturned by the court order today. And all the bids now technical committee will look into it based on our requirement of the parent company only.
Just from the perspective of, you are one of the players who will be participating in the auctions tomorrow. Are you expecting this to be a pretty heated contest now that, a lot of people who were initially rejected have also been allowed to join in thanks to the Delhi High Court? Is this going to be a heated contest tomorrow?
Yeah. We were hoping that from the beginning, because at the first stage, it appears that competition will be little more, because the number of mines available and number of chasers. The chasers are more than the mines available. So in first stage, I think it looks like there will be a tough competition. But if you see overall scenario when the 204 entire mines come for the auctions in next 1 or 2 years, I think that sufficient mines will be available to all. So if you take a long-term view, I think you'll have to have a balanced view. Because when you are bidding for a mine, you are bidding for a 30 years, not 1 or 2 years. So then you have to take 30 years view in perspective. And then one thing also you have to keep in mind while you are bidding, that bidding price will be indexed with a wholesale price index every year. So next 30 years, you'll have to keep that in also mind. And overall the coal scenario.
I know that you are looking at the non-regulated sector, that's the non-power sector. That's where you'll be participating tomorrow. So you don't expect the bids to get aggressive. You think pricing will remain rational in these auctions?
Only there may be some aggressive bidding, because you will see initially we thought it will be a sectoral bidding, like steel will have to fight with the steel. But since now this regulated, non-regulated in relation to steel, cement as well as aluminium smelter for their captive power requirement also will be bidding for this. So now the steel industry will have to compete with cement and aluminium. So it looks there, because their balance sheet is a little stronger. there may be some, I think, aggressive bidding in some of the mines because they would like to grab those mines.
All right.
But if you see the medium terms, I think one will have to take a balanced view.
All right. Thanks, Mr. Mundra, for joining in with that take. So that's Sarda Energy. Obviously, getting that relief coming in from the Delhi High Court today, being allowed to participate in tomorrow's auctions. Shireen?
Well, there's partial relief for them, but, Surbi, the legal woes for the government are mounting, and I don't believe that we've heard the last as far as this matter is concerned. But let's move on and talk about the big macroeconomic story, and it comes into us from the trade data. It is looking better. The trade deficit is, in fact, now narrowed to about $8.23 billion for the month of January. But here's the bad news. Exports continue to decline for the second straight month. Imports, and that's the good news, have also declined, and that is largely on account of oil imports. Lata joins us now to take us through the numbers. Lata, good news there on the macro economy.
Good news and on expected lines, with the crude prices falling and the expensive inventory getting exhausted. Clearly, the trade deficit is beginning to reflect the new reality. Our exports, our imports are not very expensive. They're largely crude imports. So just to run through the numbers again, trade deficit has come in at 8.3 billion versus 9.4 billion in the previous month, that is December. Year on year, month on month, that is down about 12%. Even in year on year terms, the trade deficit has fallen. It was about 9.9 billion year ago. Coming to exports, that's at 23.8 billion. That's down 11% from the previous month levels as well as from year ago levels. So that's a spot of bother. Exports are falling because the global markets are not very cheerful, and that means less demand for Indian goods. Imports, again, they've fallen largely because of oil. But first, the overall import number at 32.2 billion compared to 34 billion. From year ago levels, it's fallen by about 11.4%. The key contributor is oil imports, which is standing at 8.2 billion compared to 9.94 billion. That's a fairly decent fall, even month on month, by about 20%, or 18%. But year on year, it is down 37%. Last year, same time, we were importing something like $13 billion of oil. This time, it is just $8 billion. Now, that is the difference in the price of crude falling from over $100 to less than $60, probably $55 at the time of contracting. The heartening number is the non-oil, non-gold import. That stands at about 23 billion compared to 24 billion previous month. But importantly, it's up 3.5% compared to year-ago levels. We would be happy with the non-gold, non-oil import simply because that is the engineering exports. That is the imports, purchased for industrial growth. So it means that the industrial growth picture, at least month on month, has not deteriorated much. And of course, heartening number even from the gold import, it's 1.5 billion compared to 1.3 billion month ago, but that's not terrible. 2 months ago, when the gold import restrictions were removed, it had shot up to 5.6 billion. That was the festive month. But 1.5 billion, we can live with that. I just want to come back to the trade deficit number of 8.3 billion. Now, along with this January number, we already know the December services exports number. That is a net, that is what? Largely software and such like. The net import, net software export is 7 billion. So just look at it. It's an excess of 7 billion in services and a deficit of 8 billion. Technically, there is no deficit at all. It's a 1 billion deficit. So this quarter might well be a surplus. If at all it's a deficit, it will be like $1 or $2 billion.
All right, Lata, thanks very much for taking us through the trade deficit data. But let's now get down to earnings. And what a good quarter State Bank of India has managed to deliver. Profits have jumped 30%, helped by strong growth in corporate loans as well as better recoveries. And net interest income is up by about 9%. That's been helped by strong growth in treasury income. CNBC TV 18's Manasvi Gilani takes us through what's been a very good quarter for India's largest public sector bank.
There is no magic wand.
State Bank of India's Arundhati Bhattacharya has a good reason to smile. While almost every other bank in the country is struggling to keep asset quality intact, SBI has pulled a rabbit out of the hat. The bank's gross non-performing assets came in flat at 4.9% against 4.89% in the last quarter. The real triumph, however, is that the bank has also managed to recover about 667 crore rupees in bad loans. and reined in fresh slippages at about 7,043 crore rupees against 7,700 crore rupees in the previous quarter. The bank is also confident that its restructuring pipeline will be in the range of 5,000 to 5,500 crore rupees in the fourth quarter of this fiscal.
We are sort of firing on all fronts to see that we get better recoveries during the last quarter. We are having a mega auction on the 14th of March where some 300 assets will be put on sale, including 100 residential assets, and it's worth around more than 1,200 crores. So, if we can get that, that would be a very major step. So we are doing everything we can to ensure that recovery happens, and we are also now trying and addressing stress as quickly as it becomes visible. So we have 3 risk grades of 1, 2 and 3. We are trying to address at the 1 stage itself so as to prevent a further slippage.
A proactive approach in curtailing bad loans is not the only reason for this strong performance.
The fact that our NII, we could do a good growth in the net interest income. Also the fact that on the other income we have done more than a 24% growth. Of course, that's been helped by treasury gains. And also on the expenses side, they've managed to hold it at 5.51% growth. So I think, it's a combination of all 3.
While SBI expects these parameters to continue giving it a boost in the coming quarters, it is also confident that capital infusion will help take it one step further. In addition to the 2,900 crore rupees that the government plans to infuse into the bank, it has also had the board approval to raise about 15,000 crore rupees through a public offering. SBI is banking on these funds to help it achieve its credit growth targets and expand its investment portfolio. This strong performance and the upbeat outlook has had the street excited, and that accounts for the 8% jump in the stock prices after the numbers were announced. In Mumbai, Manas Vigilani.
Well, a good quarter there for State Bank of India. It's been a good day for our markets and a good week for the Dalal Street as well. On that note, it's time for us to wrap up this edition of India Business Hour. Have a great weekend. Remember, stay tuned to CNBC TV 18 for all the action from the coal auction, which kickstarts tomorrow morning. Till then, from all of us, say goodbye. Many thanks for watching.